Hello, everyone. I'm Anita Sharma. Welcome to Market Call tonight. Our guest, Kim Bolton. He is the president and portfolio manager at Black Swan Dexteritas, taking your calls, emails, and tweets on tech stocks. Very hot right now, or maybe not so much. Our number toll-free, 1-855-326-6266. Our email address, marketcall@bnmbloomberg.ca. Our Twitter handle, @marketcall. Kim, good to meet you.
Thanks a lot, Anita.
We've been having some fascinating discussions off camera. I'm looking forward to sharing some of your insight with our viewers. Let's start, though, with some negative news for the day. All three major indices south of the border, the Dow, the NASDAQ, the broader market, S&P 500, officially in correction territory for the first time together since March 2016. Your reaction?
2 months ago, Anita, people couldn't get enough of it. And here we are, 20, 25, 30% haircuts. It's still the same companies, still have the same reoccurring revenue on a monthly, annual basis. It's the sentiment out there. A couple of months ago, it was very greedy. Now it's all fear. It's a good time to put your money in a little bit.
Put your money in now, or do you want to wait until there's maybe even a bit more blood in the streets? How long do you see this volatility playing out? And I know we're going to talk extensively about tech stocks. A lot of folks say, all right, they're primed for some buying opportunities here. Just look at these markets on the screen now. What a move southward there, Kim. Is it time to buy, or is it time to still wait and see?
There's a lot of cash out there. There's a lot of appetite to buy, but there's still a lot of uncertainty. And especially, well, you know, they're working through the tariffs. There's all this concern about growth, and possibly a recession as dictated by the flattening of the yield curve and so on. But there's another uncertainty. That's next Wednesday. What is the Fed going to do?
What is the Fed going to do? And I want to basically offer the cliff notes. What a head scratcher this is. Jay Powell of the U.S. Fed originally came out, and this is what roiled the markets. He was going to be on a rate hiking path. The markets turned every which way but up. You had Trump come out. You had various analysts come out saying you can't do this. He backed on that, backtracked. And then we thought, okay, we'll get a December rate hike and maybe one or two next year. And now December's a big question mark. What's going to happen?
I think he has to raise it next week. He's talked so much about it, but you can be assured that it's going to be a very dovish commentary. So he has his presser after. Markets are down. You know, you look through Europe, they're down. The DAX is down 22% year to date. You've got China and Asia that is down 25, 30%. Now you've got the North American markets in correction territory. So he will say that he's going to look at, well, the FOMC is going to look at the market data, look at the data coming in. Right now, everything's sort of priced in that you're going to have maybe two. If you go back 4 to 6 weeks ago, it had it priced in maybe 3 hikes next in 2019. Now they're back to sort of maybe 1 or 2. And I think by middle of next week, people are going to say, well, I don't know, it's a flip of the coin, even whether you're going to have one come March.
What a turn of events over the past few weeks. I want to ask you a bit about the Chinese growth situation. You touched on that. I would like you to elaborate on the data that we received today. Are you at all concerned about the Chinese consumer, about the U.S. consumer? There were fears about slowing economic growth, particularly in China. Very troubling, and that led to today's, for the most part, to today's downturn.
Well, that was one of them, but there were 3 or 4 data points that came out today. Last night, it was the investment side, it was the retail sales numbers that came out of China, but it came out, the expectations on the retail sales were up 8.8% on the month.
Super high expectations?
Well, but it came in at 8.1.
Yeah.
Today, the U.S. came in at 0.2. I think I'd rather take 8.1. But it was below expectations. But then it rolled into Europe, and the PMIs, the purchasing manager numbers came out, and they were lower, and actually France showed a contraction on the PMIs. And then the broader Eurozone PMIs came in, and they were ratcheted down, but still in growth. But, you know, people aren't looking for a silver lining out there. You can always say that France, you know, with all the issues that they're having on the political and social side, in France actually brought down their purchasing manager numbers over there, which brought down the Eurozone. But people aren't looking for a silver lining. People are concerned about the market.
You know, you've got a bit of a silver lining with respect to telcos and equipment makers. We're out of time for this segment, but I want to pick this story up on the other side of the break. We're with Kim Bolton. He is the president and portfolio manager of Black Swan Dexteritas, talking about tech stocks. Our number 1-855-326-6266. Welcome back. We're with Kim Bolton. I'd like to carry the conversation, Kim, if we can, with respect to what is hitting the markets and why we have such a negative sentiment. One of the reasons the Huawei CFO under, what do you call it, house arrest, I guess we can say, in Vancouver, awaiting a trial on extradition possibly to the United States, a bit of a China-U.S. tussle there. You've got a silver lining with respect to telecom equipment makers in general, and why are we heavily weighted on Huawei when there are other telecom equipment makers out there?
So this is all about the 5G deployment.
Absolutely.
And it's happening right now. People have, countries have already started in actually, oh, here we are. So this is a chart or a diagram of the 5G ecosystem. So going from 12 o'clock down to 6 o'clock, you have the telcos. These are the companies like Bell and Rogers, but AT&T and T-Mobile, but you have them all around, going all the way down to Telstra, which is the Australian one. And then going from 6 o'clock up to 12 o'clock, you have the equipment suppliers.
Got it.
Now, this is all about the next, or the 5G networks are the next generation of mobile internet connectivity. And it's different. It's different because it's going to make things a lot faster and a lot more accessible. And it needs more different equipment than the 2, 3, 4G. And so on that chart, you have the equipment suppliers coming in. But it's interesting, when you look at the infrastructure and the network players in there, it's a pretty finite group of people.
It is.
Of companies. Huawei, which is privately owned, heavily funded by the Chinese government. And perhaps
there's been
some influence.
allegations of, you know, perhaps some nefarious activity, just allegations at this stage, but enough to have senators south of the border reach out to our Prime Minister, urging Prime Minister Trudeau not to do business with Huawei when we're developing 5G networks here in Canada. And to your point on that chart, there are other options. They may not be as sexy in terms of being able to pay. Maybe it's not as an attractive a price point as a Huawei. You've got your Nokia, you've got your Ericsson out of Finland. You've got, well, ZTE's Chinese as well. But there are other options. So it begs the question, why is Huawei so instrumental? Is it because they've been offering their services at a much steeper discount?
Well, look in that chart. Those are the equipment suppliers. It's a $100 billion market. It's huge. Huawei owns 28% of the market share of the equipment suppliers. That's big. They're number one. Number two comes in at Ericsson, that's 26%, and then you have Nokia at 24%, and then it's sort of spread around. And there are other names involved in that. That's why it's a big deal. It's a big deal about Huawei because we go to a lot of conferences around the world and meet with these companies. You know, when someone wants to buy some sort of network equipment, for 5G from Ericsson or Nokia. Suppose it's $100. Huawei comes in and says, we'll sell it to you for $50. In fact, maybe we'll give you one free. You buy one, you buy two, you get
What a
one
deal.
free. So anyway,
Yeah.
that's how they've sort of cornered the market. But then there's all this fuss about, what's inside the
Security,
network. Yeah,
or lack
exactly.
thereof, potentially.
But it shows you a great investment opportunity because you can see the likes of Japan, the UK. Deutsche Telekom was even talking about it today, of not buying any Huawei. So what's the alternative? Ericsson, Nokia.
Okay, and that gives us a good hint as to what's coming up later in our program. So we'll leave our viewers in suspense. Speaking of whom, let's get to Henry in Hamilton. What's your question for Kim?
Good evening.
You bet. Good
Please,
evening.
what do you consider the prospects to be for cybersecurity in general and FireEye in particular? Thank you.
All right, thank you, Henry. So cybersecurity now. We talked about the 5G issue. Your thoughts?
Thanks very much, Henry. FireEye, they're really sort of the poster child when it comes to security. You've heard about software as a service. They are the poster child of security as a service. Instead of actually offering hardware, they actually offer the software side of it. And they were the first to actually get into that. And so they've got a little bit of a lead on it. It's come down quite a bit. We don't own it right now. On the cybersecurity side, we have Palo Alto, and we also have Splunk on that side.
Okay.
But Henry, I do like it. We're actually sitting on about 18% cash. We're just letting sort of the market sort of settle out here. That is one of the stocks on our shopping list.
Great. I want to get to another chart that you provided for us, if we can get to this. This is your top 10 strategic tech trends for 2018, going through about a 2 to 3 year period. We talked about 5G. What else is looking attractive to you here?
Yeah.
AI popping up here, autonomous driving.
So I'll do it really, really quick. This is, a lot of people ask us, how do we look at this massive market of information technology? The bullseye is all about digital business. That's what it's about. And then there are 3 trends going around that. And then there are sort of 10 themes around that. The 3 themes are the merging of the virtual with the real world. That bottom green area is about business intelligence. And then the orange area is all about electrification and digitalization. But then you have these themes going around it, and those are the investment opportunities. Constantly changing. But when you look at our portfolio, that is our portfolio.
Okay.
And then the leadership in those themes and those trends.
All right, excellent work, Kim. Thank you.
Thanks,
We're
Anita.
just getting started. We're with Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas. Taking your questions on tech stocks. Our number, toll free, 1-855-326-6266. We'll see you in 2 minutes. Welcome back. Let's get to a tweet now from Airwolf to Kim. He wants to know about Apple. Everybody wants to know about Apple. Your analysis on this tech behemoth as it dukes it out with Qualcomm. Who's going to win this battle, Apple?
Yes.
But how bad
Well, they
is it
have
going
deeper
to get?
pockets,
But how
but-
bad is it going to get? It just keeps going back and forth. These headlines are quite irritating, I'm sure, for Apple, enough for them to try to bow down to some of the demands.
Well, but they work around it very, very quickly. Qualcomm got one of the circuit courts over in Western China to come out and said, you can't sell these new
iPhones, and now the new
iPhones
ones.
in this area, and it's sort of like you can't sell these phones in Labrador. But you can sell it everywhere else,
So
right?
it's a regional victory in China.
But within 36 hours, they actually worked around it, and they said, okay, so we're not going through any of the Qualcomm pieces, and so you can lift the ban.
Okay, but if it's a minor issue, then why would Apple work its way around it? Clearly, it's important enough for Apple to want to work through this in order to appease Qualcomm to some degree. Is it the optics?
Well, but it's like the royalties lawsuit that they have with Qualcomm. That gets stretched over a long period of time, and you have to pick your battles.
And they've been at it for years.
Yeah, and so they picked their battles, and I'm sure they went back. Can we work around this and get it off of the headlines? Let's just do it.
Okay. Let's get to the phones. Jerry in Toronto, what's your question for Kim?
Good evening, Kim and Anita.
Good evening.
Kim, my question is about Activision Blizzard. I've actually had it for a long, long time. Originally bought it around $11, $12, and saw it go all the way up to $85 only a couple of months ago, and it's almost taken a 50% haircut. So I was just wondering, do you own it? What do you think about it fundamentally? What do you think about it from a valuation point of view?
Okay.
Do you think I should hang on to it or sell it? Or
all right. Excellent questions, Jerry. Thank you.
Jerry, yes, we own it. I only have a 1% position in it, which is tiny. We want to build it up to a 3% position. And you're perfectly right. It's much better to buy it down here at $48 than up at $75 or $80.
A lot of stocks on sale right now, Kim.
Right. And so we're just letting things settle,
Yeah.
and we're ready to buy in, and we want to build that up to a 3% position. It has a terrific franchise, especially in the whole gaming. It's a leader in the gaming ecosystem. They put a lot of money into the mobile side. A couple of the games didn't sort of do as well, but the Call of Duty has done extremely well. That whole Overwatch league that they have, which is the new gaming league around the world. Toronto has a team in that, and they just bought a team for $25 million back in September.
This is big time now.
It is. It's huge. So I do like it. I'm going to let the market sort of settle here, and I do want to buy it in. It's very, very tempting to buy it down here under 50, though.
You want the market to settle. Where are we going? Some folks are even saying we're headed for a recession. Some of your colleagues saying that's where we're going. Others say no, if we have a recession, it's not going to be until 2020. What are your thoughts on that very quickly?
I think what's going to happen, and everyone's sort of, you know, are we still in a secular bull market? Yeah. Is the yield curve pointing us toward a recession into 2019? The way we look at it, there are so many moving parts that you're going to have many cycles. Yeah. And a friend of ours, Paul Tudor Jones, I think he said it very, very well. You're going to have 10% up, and you're going to have 10% down, and then you're going to have another 10% up. You're still in a secular bull market, but with a lot of volatility. And when you have these corrections, only because I've been doing this for a while, it's the age-old proverb that, you know, you don't want to catch a falling knife. And so you just want to let things settle. You can never buy things at the bottom and sell them at the top, but let it settle, let the market come back.
And stomach the volatility, because that does seem to be what's going to transpire for 2019. That's going to be the theme. It's shaping up to be so. On that note, let's get to an email from Fred. He wants to know very quickly about Square. Would you get into this company at this point, or would you let it settle, as you say?
Yep. Square. We have a 1.25% position in Square. And it all falls into that fintech. You know, we got about a 3% position in Visa and MasterCard, 2.5% in PayPal. And we really, really like Square because it's a disruptor for those guys. But it's very expensive. You look at the PEG ratio on Square, even though it's come down significantly, it's still got a price-to-earnings growth ratio of about 2.6. So it's still a little expensive. But this is one that's on our shopping list.
Okay, and we'll get to your other list, your past picks list, next. You're watching Market Call Tonight. All right, welcome back. It's time now for Kim Bolton's Past Picks, and we are going to start, Kim, with Amazon as you rifle through your papers. Not bad, not bad. You're basically slightly negative, flat to negative, given this tumultuous period that we're seeing in the markets. Your thoughts on this?
Amazon is definitely in our top 5. We hold about a 4.5% position. We've been up as high as 6. We took a little bit of money off a couple of months ago, and the market's taken a little bit away from us. Sitting under 1,600. If you look at the analysts out there, the 1-year expectation is sort of anywhere between 2,050 up to 2,200. It's the leadership that you want out of this. It has fantastic annual recurring, even monthly recurring revenue that they get out of the e-commerce, out of the and Amazon Web Services that they can put into their other businesses. So this is a core holding of ours.
All right, and Visa, this is one which a lot of big banks have expressed an interest, a bullish interest in. Visa, has it seen a bit of an uptake so far? You're down about 2% on this stock, but do you see it moving higher as more folks pay for things with their phone?
Absolutely. This is our second largest holding in the portfolio. It's the largest within the whole sort of fintech space that we have in here. It is the leader on the fintech, and you have to own it. It's just
Okay, so it's a strong case for Visa. And Ericsson, we touched on this earlier. There are more games in the town, more opportunities. You don't have to go to Huawei specifically to build out your 5G network across your country. We may be talking about Canada right now. You have other options. Is Ericsson seeing a little bit of a benefit, if you will, from the problems that Huawei's experiencing on the political front and the arrest?
Yeah. And you can see it on, it's a volatile, for a massive company, it's pretty volatile. We bought into this back at the beginning of this year in Q1. We bought into it, probably have an average price at about 807. It's been all the way up to 922, and here it's back to sort of that, just under $9. But it's held up. The reason it's holding up so strongly is because of the whole 5G deployment. It's happening.
Okay, so it's twofold then. It's the 5G deployment and the fact that it's benefiting a little bit from the fact that Huawei is facing some political pressure.
Absolutely.
Okay, excellent. Not excellent for the company, but excellent analysis.
The other one that we like in this space in the 5G as an equipment supplier is Nokia.
Okay.
We don't own it yet. It's on our shopping list. It's a little bit, it's more expensive on a PEG ratio basis versus Ericsson, but I'd also recommend Nokia.
Yeah, and I'm sure a lot of your colleagues will be looking at these other suppliers now too, given the problems and the headwinds facing Huawei now. Yeah. Let's take a break here. Our market call tonight, our number 1-855-326-6266. Back to your phones next. Welcome back. Let's go to the phones. Kim, Eddie in Mississauga, Ontario. What's your question for Kim?
Hello. Good evening, Anita. May I have your guest opinion, please, on CGI? They've been talking about making a big acquisition for the last few years, and nothing is happening. Thank you very much, and have a great evening.
Thank you, Eddie. You too. CGI.
Thanks, Eddie. We don't own it now. And we just sort of saw it as being a little bit of dead money, and you can see it on the chart that it's sort of sat there. Yeah, a little bit of volatility. There's the leadership there is CGI, certainly in Canada, and then you have Accenture. A couple other ones that Eddie, I'd recommend to you that we still own is Luxoft and EPAM in this sort of information consultancy space. And they're very, very cutting edge. But I think I'm going to talk about another Canadian company that actually rolled out of CGI. We'll talk about that one a little later. That's
Okay.
the Alithia one, right?
Right. So, Eddie, stay tuned for more comments on Alithia. In the meantime, let's go back to the phones, head to Vancouver, where Michael is standing by.
Thanks, Anita. Thanks, Kim, for
You bet.
taking my call. Kim, my question is on Microsoft, but it's also a two-part question. I have very little in the tech space in my portfolio, and I just wondered if you would recommend one biggie like a Microsoft, an Apple, or an Amazon, or would you recommend one big one like one of those, plus an ETF to cover off some of my shortcomings in the tech space? Thanks
All
so
right.
much. I'll hang up and listen to your response. Have a great,
Excellent.
great weekend and a happy holiday to the two of you.
Oh, you too, Michael. Thank you very much.
Thanks, Michael. I
So
love
for-
your question.
Right. So let's tackle the first part, which
Okay,
is which
Microsoft.
one would you get into? Microsoft?
You know, our biggest holding is Amazon.
Yeah.
Microsoft is number 8.
Oh, there you go.
So we got about just over 3% in Microsoft. Microsoft is such a fantastic franchise. When Satya came in as the CEO, from Ballmer, he saw the vision of where to go with the software, get away from the hardware, and he built up the Azure, which is the web, the cloud side of it.
Right.
Then he went out and he bought LinkedIn. So he has a whole bunch of very strong horses in the race, and that's why they're a leader, and that's why they should be a core holding. You know, you look at the Azure, the revenue growth over the last year on Azure, this is on the cloud, is 76%. On the LinkedIn, it was 33%. Even they've got into advertising, and that has grown 20% over the last year. So they're a fantastic company.
Does Michael need a hedge?
Does he need a hedge? Michael, you mentioned about an ETF and a hedge. What I'd recommend is buy a technology hedge fund, and you'll get both of them. So what we do is, you know, this is a secular bull market, so we're net long on stocks. We have sort of some shorts in there, less as an investment, more as a trading vehicle. But then what we do on the hedge is I have the luxury of having a number of very, very smart serial technology entrepreneurs that invest with me and work with our company. And so they develop a lot of macros for us. We have a macro that actually takes our stock portfolio and it tells us what is the strongest correlation on our stock portfolio to indices around the world. And then we short those indices in the futures market. And so I know it's a long story, but basically what we have now is we're about 82% long. We have about 18% cash. And then we have a 42% short equity indice overlay on the portfolio. Now, so that puts us sort of net long, but only, 35 to 40%. But that's why our numbers are certainly better than the market.
And we talked about that during the break. That's why your past picks, you didn't get hammered as significantly as we have seen in the past few days with perhaps some other past picks. It's because of that hedge.
Right.
All right.
Things will change, though.
Yeah.
We're not sure whether you're going to go into a bear market. We think you're definitely going to have a lot of volatility. But once you go into a bear market, you want to start to roll out from being net long into a pairs trade.
Okay.
Pairs trade would be like MasterCard, Visa in the same fintech space. And then eventually when you get into a market, we'll be net short. Into a bear market, we'll be net short.
Okay, excellent. Let's get to the phones. We'll squeeze in one more call before we head to break. Steve in Belleville, Ontario. What's your question for Kim?
Hi. Thinking of jumping into Shopify, although it is seems very, very expensive, and it's extremely volatile.
Yeah.
If you were to buy it, what would be your price point? Thank you.
Thank you, Steve. Now, this stock, speaking of Steve's volatility with respect to Shopify, down 13% today. Analysts not really happy about another share offering. This time, 2.6 million Class A subordinate voting shares. Your thoughts on this company?
Steve, you took the words right out of my mouth. It's an extremely volatile stock. We've owned it. We've been in and out of it. Normally don't go in and out of it. This is a stock that you sort of have to trade. And we don't own it right now. I'd have to go back and actually look. I don't know if you can pull up a chart.
Yeah, absolutely. Would you like a 1 year?
Yeah,
Or a 5 year?
Sure, 3 year.
Okay,
yeah.
let's take a 5-year chart. There you go. Or that's a 6 month, but
So currently sitting at 187. We haven't touched it.
there you go. There's your
okay,
3 year.
right. Yeah.
Thanks, guys.
So we have down at around sort of that 145 to 155, which is a long way away. But to actually buy it and put it in as a core in there, that's where we'd look to, instead of rather sort of trading it, we have it down as on our shopping list down around sort of that 150 level.
okay, so still some more volatility moving in the opposite direction.
And
or in
believe
the
you
same
me,
direction,
over the
down.
next year, you'll
Yeah.
see 150.
And but are you bullish on this company at all in terms of what they're continuing to do, their expansion plans, their huge optimistic plans for the city of Toronto?
Yeah, yeah, absolutely. You know, I talked about, we have an investment committee that is made up of these serial tech entrepreneurs, and a group of that investment committee actually come in from the software and the social media side, which is sort of a mix of what Shopify is. They use them for advertising, so we sort of test them. You know, what are you using? Are you using Facebook? Are you using Twitter? Are you using Shopify? And how are you actually using it? And so when you talk about advertising, those are the three that everyone sort of talks about.
Wow.
And they don't really sort of talk about Snap anymore. They you know, Shopify is within that group.
Why do they need so much money? Why are they raising so much cash?
For their growth.
Okay, so
For
they've
the
got
growth.
big expansion plans, and we already know about the plans here in Toronto.
Yeah.
Let's take a break, Kim. On Market Call tonight, we're with Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas, talking about tech. Our number, 1-855-326-6266. Welcome back to Market Call tonight. I'm with Kim Bolton. Let's go back to the phones if we can. And this is Stephen in Vancouver. Good evening, Stephen. What's your question for Kim?
Thank you for taking my question. It is on your guest recommendation for a Canadian company that is involved in the 5G equipment's production.
Right.
It's investable, that is. Hopefully I can, I'm looking for some safe investment.
On the telecom equipment provider side?
Yes, on
Okay.
the Canadian side. Thank you so much.
Thank you, Stephen. So a lot of viewers are curious about this. Let's continue the conversation if we can with respect to 5G, Huawei. You're saying that's not the only game in town, but you might have to pay a bit more to access the other providers. Is that the point of that conversation?
So a Canadian company in the 5G side. So I don't know if you can go back to that circle chart.
Absolutely. We'll bring back your
that talked
5G
about
leaders.
The 5G leaders.
Yeah.
You know, it's really divided between the equipment suppliers and the telcos. You know, of course, the telcos here in Canada would be the Bell and Rogers and TELUS. But it is going to take the telcos so long to get their money out of it. And so where you really want to invest is on the left-hand side into those equipment suppliers. And I think about Canadian companies on that, sort of the closest one I get, only because on our investment committee we have a very senior fellow from Cisco Canada, a retired fellow, and he's actually given us a great many thoughts about how Cisco is actually participating. I know it's not a Canadian company, but they are a huge supplier here in Canada of the equipment suppliers for the network switches and so on that are going into the equipment side.
All right, so Cisco would be, and it's an interesting question from Stephen, because given the shenanigans and the alleged shenanigans that may or may not be taking place, there is that sort of nationalistic viewpoint, right, where a lot of folks are saying, why can't we do this within our borders, or to your point, within the North American borders, Cisco being operating out of Silicon Valley?
If I could just sort of take a little tangent,
Absolutely.
when you talk about Canadian companies, we've been following, I don't know, for the last 6 months, a company called Alithia.
Right.
And Alithia just went public the middle, I think it was June 18th. And it sort of plays into that same space of CGI. In fact, the CEO is an ex-CGI fellow. So they're a small minnow in a big pond, but they're very, very smart people. They have, they built their business on acquisitions. So when you got the CGIs and the Accentures around the world that are building massive enterprises, this Alithia is a really interesting company because they're picking out sort of the smaller and mid-sized, and they built a great franchise, and they have a long runway. So,
but is it enough at this point to be working on a grander scale with respect to what Canada as a nation is trying to put out, trying to build out?
Absolutely, because
Okay.
you know, as I've talked with them about it, when they go to the table. And they go to the financial institutions or the energy sector, and they're looking for information technology consultants to give them thoughts for execution and so on. It's CGI, and they need someone to compare to, and probably the next, and they're much smaller, is Alithia. So it's an interesting play. They came out at about, I think it was around just shy of $4, shot up to $6, came back. I think it's closed today at $3.65. We're watching it. I'm not recommending, but if you're looking for a Canadian company, I think it's an interesting play.
Do you think the government is looking perhaps at a Canadian company or something closer to home, given the situation that's transpired with Huawei?
With Huawei?
And the backlash?
Everyone talks about Huawei. I wouldn't count it out. They own over 25% of the equipment supplying in that 5G deployment. Yes, they've been cut out of various countries around the world, but they're huge.
Yeah, but what about the security issues?
But what happened with ZTE? ZTE was the same thing.
Yeah.
And they gave them a reprieve. So I wouldn't be surprised in this whole sort of tariff discussion that's going on that Huawei has to be part of that discussion, and it will be part of the solution.
Do you think the Huawei controversy has changed the appetite on the trade tension front in terms of we're seeing China, call it what you will, acquiesce perhaps a little bit, kowtow to the demands of the U.S.? It is on the heels of the Huawei CFO's arrest. Do you think this seems to have wide-ranging tentacles, if you will?
Yeah. You know, all this week, the Chinese, the Americans, the media, all tried to keep them separate.
Right.
But you know that they're interlinked.
And the president alluded to that after the fact.
Yeah.
First said they were not related, but then saying, hey, I'll step in if I have to.
And whether he actually legally can do that, who knows?
It's a different story, but the fact that he made that comment, though.
Yeah, yeah. But I think it's, you know, Huawei is like, I don't know, Bell to Canada.
Yeah.
It's a huge, huge company over in China, and so it will be part of the solution.
Okay, excellent analysis. And again, this Huawei story really has turned a lot of things on their head as we wind this year down. So absolutely fascinating stuff. We're with Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas, talking about tech. Our number toll-free, 1-855-326-6266. All right, let's get to an email now, Kim. This is from Mark in Unionville, Ontario. He wants to know about that social media giant in China by the name of Tencent. Your assessment for the next 5 years looking out.
Yeah.
And of course, it made news because of the IPO of Tencent Music, which we'll get to in just a second. But first, let's start with this parent company.
So Tencent, we got a 1 3/4% position in it. I'll be honest, it was up above 2%, but it's like a lot of the Chinese technology companies have had a haircut over the last 6 months. But it is, we actually have a price target on here of $46.07. It's not a cheap stock, but it's you know, to us.
Issuing a special dividend now.
Yep. And it actually has
$250 million to shareholders by way of distribution.
And I was just reading about it today that I think the dividend yield on this is 4.6, I believe. But it's an expensive stock. It's still an expensive stock, but it's interesting because they have a bit of an oligopoly in China, particularly. Chinese love their mobile, they love their internet, they love their gaming, and this is what Tencent is very much about. Yes, it's an internet company, and it has a big advertising franchise, but it has tremendous leadership in that whole video ecosystem. So they have the developers and they have the distribution network in the world's largest market when it comes to video games. And they actually develop their own video games. They have a company that they have a majority ownership in, which is Epic Games, which is huge around the world. And then, of course, this week they just rolled out Tencent Music.
That's right, and Tencent Music, it has now officially dropped below its $13 IPO price for the first time. It closed at $12.81 today. A lot of ballyhoo about this particular company. It was a $1.1 billion IPO. Your thoughts on this and the direction it may be heading in?
So Tencent, if I remember correctly, it was just Tencent, the holding company, owned just over 50%. It's interesting, like Tencent Music.
Spotify owns a piece of this too.
Owned 12% of it.
That's right, and it's competing against Spotify.
Yeah.
Go
so
figure.
they're all sort of interlinked
Right.
on it. I wouldn't buy into Tencent Music. I'd buy into the franchise of Tencent, the holding company.
Okay, excellent. Kim, thank you. Let's take a break.
Thanks, Anita.
And come back with Kim's top picks. Welcome back. It's time now for Kim Bolton's top picks. And what a surprise. We're here with Cisco. You talked about this company earlier today in the hour.
You know, it is in our top 5. I think it's a number 5 pick. We have about 3.7% in this. It closed today just under $46. I think our average price, and we only bought into this thing at the end of last year. We started to leg into it. Our average price in there is probably about $38, and we've just sort of held on. We didn't get rid of it, you know, when we saw it go up to 50. So Cisco, as everyone knows, it's geared to 3 segments. It's the enterprise, it's into the service provider side, but also into small business and the home. They're a very conservative company, and they have a reputation, as some companies in the technology space. You may be surprised, but some of these companies, you know, they over-deliver and they under-promise, and this is exactly what Cisco has done, and this is what they did since the new CEO Robbins has been in there. They give very conservative guidance. You're not going to get shocked. The product order growth is very, very strong. They have regional diversity around the world.
Excellent.
Yeah.
What about your second top pick, Nutanix?
Yeah. We actually got this coming from our investment committee.
Okay.
We have a couple of fellows that are involved in data centers around the world, and they brought this Nutanix up. Basically, you know, in data centers, there's a lot of hardware, but where Nutanix came in is they brought out what they call hyperconverged infrastructure, appliances, but particularly on software. And so they bring the software, and so when you want to upgrade something in a data center, you can actually do it through the software and through this hyperconverged infrastructure software that they have. It's fantastic. They have a great moat around what they do. A lot of people are trying to catch up with them, but they have a significant lead. And we have a price target of 60, just over $61. And it's actually cheap. You know, on the PEG ratio, you'd figure something like this. The PEG ratio is 1.01.
Okay.
It's very cheap.
Excellent. And your final top pick for tonight, Universal Display Corporation.
This is, we've owned this and we've sort of legged in and legged out. It's been up as high as 170. You can see it. It's up to 200 and it's been down as low as more recently all the way down to 80. So Universal Display, iPhones, they make the screen on the iPhones,
Okay.
right? And so they have this thing called the organic light emitting diodes, and they have the patent on it. And so for the new smartphones, be it from Apple or Huawei or Xiaomi or Samsung, everyone is using Universal Display's OLED screens because they actually make the screens a lot smaller, so you can actually put a lot more power into that device.
All right, we took this down to the wire, Kim. Great to see you. Thank you very much for this, folks. Qualify or consult a qualified financial advisor before making any decisions. Have a great night.